Good morning.
Hello, how are you?
Yes. I'm well. How's your side? How is the market?
So, man.
What is also?
Up and down.
What is that? What is that? Oh, which instrument are you trading?
Me, I usually trade B300.
We only trade the synthetics.
Yeah, D300, C500, C300 only.
You don't trade the real markets?
No, I don't.
Why?
I don't know, but I'm just used to B300. Plus, I'm still learning, man. I'm still learning, as I told you.
Okay.
So, yeah.
It's okay. It's fine. Mr. Poverty Killer, how are you? Poverty Killer. It's not hearing me. Okay. So me, I trade when it comes to synthetics, I focus mainly on VIX75. Right?
Okay.
Yeah, so this is my main instrument, VIX75. So we'll start there, then we'll move on to the other crash and booms, whatever. So I hope it's fine with you.
Nah, no problem.
Okay.
No problem.
Mr. Didix.
Yes, sir.
How are you?
Yeah, I'm good.
I hope you have been making money.
Yes, I tried. The last time I blew, but this time, since I funded my account last week, at least it's showing.
Wonderful.
It's showing.
Wonderful. Did you manage to catch the sales?
You know, these sales this morning, I was expecting it. In fact, at night, I saw it was giving us a sign of buying. So I was very patient because at night the market always, I noticed that it always not trending. So I was expecting it this morning. I didn't buy. So I was expecting this morning really to see the direction of market. Unfortunately, I just see that it's still selling.
Yes, you know, when you're analyzing, right? Let me make this point clear. On the daily time frame, you need to make sure that you are aware of the channel that we are in. We are in a downward channel. This is a fact. Since April, we've been in a downward channel, right?
Yes.
So that's point number one. Point number two, in that major downward channel, are we following the trend or we are counter trending? What I mean by counter trending, this was a counter trend. What we call counter trend is a trend that you find within a major trend, but it will be opposing the direction of the major trend. That is what we call a counter trend, right?
Yeah.
That was a counter trend there. So now, where we are now, let's go to where we are. If you check, the market isn't fully touched here at the bottom here. It isn't fully touched here, which I actually expected to touch before maybe going to the top of the channel, something like that. So if you check the channel that we've been in, the market has been moving something like a triangle. a triangle, or we can call it a descending type of pattern there. So once you have identified those facts on a daily perspective, what you do when you go to lower time frames, let me make this point clear once again. We analyze and get our direction and our bias from higher time frames. The lower time frames, we use them for entry points. Do you understand?
Yes, sir.
The lower time frames, we use them for entry points. The higher time frames, we use them for our analysis and also for our targets. We use the higher time frames. Entry point, we use the smaller time frame. The reason why we use the smaller time frame for entry points and not the higher time frames is because of the type of traders that we are. If ever one was a positional trader is someone who can hold a trade for months. That person can analyze on the higher time frame and enter their trades based on the higher time frame. The reason why we go to smaller time frame for our entries is only for the reason of minimizing our stop loss.
Okay.
That's the only reason. Just to minimize our stop loss, because the majority of day traders, they are people, obviously, who don't trade. Positional traders, the majority of them, they trade millions, if not billions of dollars. Millions and millions and billions of dollars. And the majority of day traders that I know and that are in the industry, yes, they can trade millions. I've seen millions being traded, yes. They can trade hundreds of thousands, yes. But the whole purpose, so if you check the people who trade those big amounts, such people, they can trade on higher time frames. They can analyze on the daily or 4 hour and actually place their trades based on those time frames and enter there and put their stop loss there on those time frames. For example, someone who trades such huge amounts of money. For example, here, this was a level of support. Support, broken, retested the first time. This was an entry, right? Entry went all the way. Came back to retest, right? Came back for a retest. That was an entry point again. So here, even someone with even a day trader could have even taken this opportunity. Because the 4 hour is not really a bigger time frame. It's big to someone, but if ever we look at it from a bigger picture, the daily, the weekly, and the monthly, those are the bigger time frames. So this one could have even entered even with a 3-figure, 4-figure, 5-figure account. You could have even entered, or even with your 3, 4, 5, 6. You could have entered this trade simply here. Can you see why this trade was very valid? This sell here. This was the easiest entry that one could have entered. So I want you to look at this. I remember you asking me, how do you know that the market is maybe going up or is about to go up, is about to end, is about to what? Look at this.
There was a problem of the network.
Okay. Do you still remember the question that you asked, whereby you said something like, how do you know that the market is going to sell to this level or is going to buy to what level? Do you still remember? Do you still remember the question?
Come again. Network I was having a problem of network.
Yeah, I'm saying the question where you said, how do you know that the market is going to sell or is going to buy to what level? or it has stopped buying, or it has stopped selling? Do you remember that question?
Yes, yes.
Right. So I want you to look at this structure. We have analyzed the daily and we've seen we're in an over and downtrend. We have seen that. That's a point taken, right? When we're in a downtrend, obviously we need to make sure that all the selling opportunities, they are ours. This selling opportunity here, this selling opportunity here, all the selling opportunities, you need to make sure that you catch them. You need to focus more on them. Even if you miss the buying opportunities, it's fine, but the selling opportunities, don't miss them whenever we're in a downtrend. So here, this is my first touch. Here, if you look here, how do you know that the market is about to reverse? For example, here it was downtrending. This is a downward move, downtrending. How do you know that maybe it's about to shift and reverse to the upside before going down? How do we know that? We look at what we call market structure. We look at market structure. Where is market structure? Look at market structure. We are downtrending. Lower highs, lower lows. Lower highs, lower lows, right?
Yes, sir.
We are still in a downtrend. Lower high here, lower low here, right?
Yes, sir.
First way you can notice that is through the break of the lower high. The break of the lower high, it resembles that the market structure is now turned and is now in an upward direction. Break of the lower high. After the break of the lower high, we formed a higher high. Came back for a retest, higher low. That's now a different direction now. Higher high, higher low, up until we came. So this was simply a move to simply come back and retrace this level and retest this level. So let's say someone entered their sell there after the break and retest of this support. Where could have one closed? That's the question, right? Or where could have one identified that maybe now it's going to start buying? It's simple. You look at market structure. As the market is moving, going down, it's going to create lower highs and lower lows. If we are going down, the market always creates lower highs and lower lows. You mark your lower highs and your lower lows. That's the first thing. First lower high is there. Lower high there, right? Right. That's a lower high there. Came, dropped, lower low there, lower high here. So you mark your lower high. Once you mark your lower high, which will be your resistance, obviously you'd have shifted your stop loss and placed it just above the resistance. You know that if ever it's going to continue going down, it has to come and break this lower low and make a new low. A new low, it's a level where it's going to create and establish a level of support. Where did it create a new level of support? Here. That's your new low from this one. Right?
Yes, sir.
So from this low, we created this lower high. If ever we're going to continue downtrending, it has to respect this lower high and break this lower low, establish a new low, establish also a new lower high. So here, what I know is that if ever it comes to this lower low, it's going to continue downtrending. It doesn't have to come and break this lower high, right?
Yes.
So we have a new high that was created. Establish this new lower high. You mark again that lower high. Your stop losses, you'll be shifting now. You're shifting your stop loss, placing them above, just above your lower high, if ever we're selling. So if ever it's going to continue, it broke this lower low, as you can see, broke after breaking there, failed to retest, failed to really continue going down. It wasn't a problem. Then it came back to this lower high area. On the lower high area, it broke the lower high. Breaking the lower high now, it's saying now we are going up. breaking our lower high, it's simply telling you if ever you are selling, stop selling. Stop selling because we are now buying. So if you check after breaking that lower high, it made the new high, which was the higher high. Higher high, we are now up, going up, went up. We reached this level of resistance, then boom, went down. Why did it go down? Because we are still in a major downtrend. That is why all the resistances must be respected. If ever we are still in a downtrend, all our levels of resistance, the market must still continue to respect them. So market, you simply observing market structure, that's the fundamental thing that you need to be good at. Once you are good at observing market structure, you are now a professional trader. So this sell was a very easy one. You could have targeted either this support here as your target, or there is the trend line. Either this support was going to be your target or this trend line. First touch, second touch here, then here, the third touch. It reached the target. After reaching the target, you could have scalped these buying opportunities. You could have also taken advantage of this buy. Because even though we will be in a downtrend, but the market will always go down, up, down, up, down, up. So you know that even though you would have taken these buys, you know that they're not going to last for long. You have your counter trend line, which is this counter trend line. This is your counter trend line. Right. So counter trend lines, they also help you to know that we are still in a downtrend. When you see counter trend lines being broken, it's a sign that we are still following the major trend that we have been in. This was the counter trend line. This was simply counter buys that one could have taken. This is almost like 2 days of buying, then boom, sold. Almost 2 days of buying, then sold. So the problem that I've seen with the majority of people is when it's buying like this, they get confused. They think maybe now maybe, the market maybe is now buying long term. Yet that buy, most of the times, it's simply maybe to retrace a major level of resistance or just to retrace on a Fibonacci. It retraced on this resistance. Let's see this move where it retraced. You realize that it retraced on a Fibonacci. Can you see that?
Yeah.
100% zero, retraced 61.8. 61.8, then began to drop. So somehow you realize that where it dropped, it's somewhere close to this lower high level that we marked. Somehow close to that area. Those are just additional confluences that you'll be looking at. Somehow close to this zone. Because that lower highs and lower lows are simply also zones of support and resistance. Somehow close to that area, even though it never touched. Here it simply touched the 61.8, then dropped. So here you could have entered either straight on the 61.8 or used this counter trend line. Use this counter trend line. Same as here, you could have used this counter trend line. If ever you didn't enter on the resistance, you could have used this counter trend line and entered after the break of the counter trend line. Same as here, if ever you didn't enter on the resistance, which was the 61.8, you would have used the counter trend line to enter your sales. Your target, you're looking at this support or this trend line. Once here is broken, we are looking to the next. We are looking forward to the market to go to the negative 61.8 zone there. Negative 61.8, which is also our trend line, our major trend line on the daily. Do you understand?
Wow. Yes.
Any questions so far?
Yeah. Yesterday I didn't miss it because honestly speaking, I didn't analyze on the daily time frame.
which is the biggest problem that you can ever do. That's the biggest problem that makes people to lose money unnecessarily. Always go back and start there. That's where you get the overall direction. And
another things, I think this will help even a lot of people that are going to watch it. I've been experiencing something of I will enter the trade, then when the market start moving, it will move up. I will notice that it will give me a profit of $60. I can even go far until to $100. Then I will keep on holding it, and the market again will reverse. Until you know, I even lost all the profit. Why? Because sometime I don't know a way to come out. If you remember these past days, I was just coming out of the trade, coming out of the trade, and you have been asking me, why did you come out? You know, it's because some of the things you don't know where to come out, you know. It's like 2 days ago I've been asking, what am I really trading? Am I trading? Am I doing a swimming trade, or am I doing a day trading?
So that one now, it depends with the person now. It depends with the person. Where to come out? Number one, it depends with what do you want to use as your criteria of coming out. Personally, I use the market targets as my criteria for coming out. For example, if I enter on such a level of resistance, I look forward, I can hold all the way up until we reach there, right? That's my criteria. Someone might decide not to use that criteria as their criteria of coming out, mainly because they are still trying to build their account balance. Because when you're still trying to build, you don't want the market to go after going your way. Maybe let's say you have $100 account. Then let's say it goes all the way to $50 or $100 profit. You don't want to have a retracement that will take all of that money back, because you could have actually closed, maybe that retracement after it happened, you could have actually entered again. So that is with someone who is trying to build. So you see now, obviously we are now two different people. So it depends with the person, the account balance, the criteria that you're using. Are you using the market target, or you are simply using your personal targets to say, if I make this certain amount of money, if I make this certain percentage, I will simply close. You can actually use that criteria as well to say, if I reach this certain amount of money, even though the market might not have reached the market target where I'm expecting the market to go target-wise, even if it doesn't reach there, I will simply come out once I make this certain amount of money. That's also another criteria that you can use, because you also need to apply the concept of risk management, and also to use logic whenever you are having your trades. You also need to apply logic in the sense that once you have a certain amount of profit, let's say 50% to 100% profit, if ever you double your account in a trade, you don't, sometimes if ever your account is still small, you're still trying to build, you don't need to keep on holding. What you can simply do, if ever you don't want to close, you can simply shift your stop losses to the maximum level, so that even if it's going to reverse, it's going to close maximum profits. Do you understand?
Yes, sir.
So those are ways that you can also deal with that. If ever you notice that every time my profits are being taken after the market goes where I was expecting, but my profits, they end up being taken. What you simply do, whenever the market is moving in your favor, once it moves a certain reasonable amount, I'm not talking of small monies here, whereby if it moves $10 profit and you want to shift stop loss already to break even. No, I'm referring to at least, depending on the account size, smallest account sizes. If ever you see that at least we are we are up 30% of our 100% target move. If we are targeting the market to move 100% move from here to here, if it moves 30% our favor, at least there I can shift my stop loss to entry point. Once I shift to the entry point, as it moves, let's say 50%, I can actually shift my stop loss to a winning zone. So that even if it reverses from that 50% level, I know that I can actually close some profit. Then if it moves a certain move whereby I know that this amount is reasonable to my account size, I actually need this money for my account balance, I can actually decide to close. If I don't want to close and I still see that this market hasn't reached its market target, I can simply shift my stop loss and place it on a maximum level, so that even if it's going to reverse, I'm going to close maximum profits. Do you understand?
Yes, sir.
Yes, so that is what you can do. You shifting stop loss, it's what you need to do. Especially when we have targets that we are targeting the market to go. Here, from this entry here, our target is obviously this support or this trend line. So meaning what you'll be doing, you'll be shifting your stop losses as the market will be moving in your favor. You shift your stop loss, shift your stop loss, shift your stop loss as it will be going down. You simply identify zones of lower highs on a, whether it's 30-minute or 1 hour, you identify zones of lower highs. For example, once you identify your lower highs are best points for you to shift your stop losses to. For example, this is a lower high because it established a resistance there, right? Once I identify that this is my lower high, I entered there, I can now shift my stop loss here. Once it breaks my lower low and established it, once it breaks my lower low like that, once it breaks my lower low, I can actually shift my stop loss further just above here. Once it comes back to retest and goes, my stop loss is still safe there. Once it breaks this low, this lower low, I shift my stop loss again just above this lower low. So you see that even if, let's say, it came back, it came there and reversed, how much I've closed already, a lot of profits there. Can you see that?
Yes.
So here already your stop loss will be above there. Came to the zone, which is your first target. Right now, your stop loss right now is above this support. Obviously, you're expecting to hit. Obviously, it's almost there. This one you can even close manually. So that is how you deal with that situation, sir. That is how, especially when we're in a downtrend. When we are in a downtrend, you know that market is going to, the sales are going to hold. The buyers can actually play around and consolidate and play around, but the sales, they are the ones that are, if you check here, the buyers, in as much as they were happening, but there was something, there was moving in a struggling way to go to the upside. They were going up, yes, but in a struggling way. Check the retracements, they were deep, but check the sales, how they were flowing. Simple, flowing very nicely. So you need to know the direction. Once I'm trading in a downtrend, I can actually hold my trades for longer. If ever I'm trading a counter trend, there you don't need to hold trades for longer. Trading a counter trend, you can actually be scalping, entering, coming out, entering, coming out, entering, coming out. That is when you're trading a counter trend. Then when you're trading following the trend, trades there, you can actually hold them longer or just be shifting your stop loss. You understand?
Yes.
So that is how you can deal with it. I hope it's clear.
Yeah, now it's clear, sir. Now it's clear. You just give me a big picture now.
Okay. So that is how you do it. Identify, am I trading a counter trend or I'm trading following the main trend, right? Once you identify that, am I in a counter trend? A counter trend, there you can play with scalping, entering, coming out, entering, coming out. You can scalp and do that. But when you're following the main trend, you always know that it's going to move a big way. So there I can hold my trades for longer and I can also be shifting my stop loss so that even if it reverses, I'll close maximum profits. So that is it. What we are now expecting, I'm most probably right now, I'm looking forward for the market to come to this zone before buys are safe. Buys are more safe either here on this zone if it comes there, or you can use your trend lines. Trend lines are always going to be there. These are your friends. You can use them for your entries. You can use them for your targets. There you entered break, either you entered on the 61.8 or on the break of the trend line. Come back to retrace. So here, I'm also having this trend line here, just in case it doesn't come all the way here, right? I'm saying I'll buy if ever it does something like this. Break my trend line, retest, I'll buy. I'll also buy here. If ever it doesn't come all the way here, right? That's my buying bias. That's my buying criteria. I'm going to buy if either it comes all the way there, I will buy. If ever either it doesn't come there, breaks my trend line and retest, I will buy. That is my criteria for buying. Then for selling, I will sell once it breaks. I will sell again once it breaks this trend line. Once it breaks this trend line and reaches this trend line, I'm going to enter more sales. Then we go all the way to the target, which is here. So already I have my criteria for buying. I have my criteria for selling. Meaning, if ever my criteria for buying is not met, I'm not going to buy. If ever my criteria for selling is not yet met, I'm not going to sell. What am I doing? I'm simply waiting. You see where you guys, you get it wrong sometimes. You always want to be inside. While the criteria for buying is not yet met and the criteria for selling is not yet met, but you find yourself in a trade.
Yeah, that's true.
So that is where you guys, you encounter losses. That is where you guys encounter losses when you're trying to enter unconfirmed trades. We call them unconfirmed trades, trades whereby you enter, but the criteria for buying is not fully met. The criteria for selling is not fully met. The only criteria that is there is the criteria to wait. That is where the majority of people, they lose money. Entering when it's not time to enter. They enter at the same time the market is saying, don't enter, wait. The market, because this market speaks. The market speaks. All these patterns and everything. It's the market talking to you. It's talking to you, telling you now that right now the buyers are in control. Right now the sellers are in control. Right now the buyers are in control, sell. Right now the sellers are in control, sell. It's always talking. The market is always going to talk. So many opportunities this week were very, 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 very clear. So many opportunities to buy and to sell were very, very clear. Look at my trend lines. This buy here, if you didn't get it from the bottom, you would have entered on the break of this trend line. Entered here, retracement, that was a Fibonacci retracement. You would have entered as well, more buys. Went back to the resistance, you come out. Went down, you enter either there on the break of your trend line. You enter sales, went all the way to the trend line. Here, if ever you wanted to enter these buys, you simply use your trend line. Simple thing, simple, very, very simple thing. I don't know why people are not making money, honestly. Especially on VIX, no, man, no. Check,
you know what?
Check. Hey.
Yes. You know, that's the reason why you are a mentor, is because you have mastered these things, and we are still trying to come on your way so that we can be able to, you know, I'm always say, every day you explain this market, you always enlighten something, you always make it to be easier. Like today, I can say it. Now I've seen the whole picture of the market. As for now, I can say from today, just
have a better, better view.
Yes.
Wonderful.
Yes, better understanding. This is now a clear vision of the market. Like the way you were saying that you don't need to know everything, you know, for you to trade the market. But, you know, just this trend line, you know, counter line, these are what they are just enlightening me. They are enlightening me, and I don't need a lot of things, but
yes,
I've seen already a big picture. Yeah. So that's why, and you know, most of things like the past week, I stopped playing around other pairs, and I concentrate myself in a VIX, because I noticed that when I try to trade another pace, I will lose. But when I try to go in a VIX, as much as I can lose, but I'm not going to lose a lot. I'm not going to lose a lot. But yeah, but as for now, I can see this is the big picture, sir. It's a big picture for me. And it just opened a lot of things right now.
Wonderful, wonderful, wonderful. So the higher time frames, they have a clear picture than the lower time frames. That is why you always need to start there. If you check my analysis and everything in my entry, I never even went to, I didn't even need to go to 15 minutes. You understand? Because I know that the higher time frames, they have less noise than the lower time frames. So once you focus on smaller time frames, you think that this thing is going to buy, it's now going up or whatever, but yet it's simply a retracement on a higher time frame perspective. You understand?
Yes, sir.
So all these opportunities, selling, buying, selling, buying, selling. We will buy if it comes back up here. We'll sell if it comes down here. Simple. You're supposed to sell, you're supposed to buy. You're supposed to sell, you're supposed to buy. You're supposed to sell. Simple. Very, very simple.
Oh, wow.
Very, 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 very simple. 1, 2, 3, 4. 1, 2, 3, 4, 5 opportunities. 5 big opportunities. Selling, buying, selling, buying, selling. Right now, we're waiting for the 6th opportunity here. Either it's going to break outside or